you have to pick a type of inventory system to keep up with the costs related to inventory. You're going to either use a periodic system or a perpetual system. If you choose a periodic system, what that means is we keep up with inventory periodically. You don't always know the exact amount of inventory that you have on hand and the exact types of inventory you have and the cost of goods sold that's associated with it. So if someone came into our store and purchased an item, we would not automatically know the cost of that sale. We would not automatically update our inventory for that. We would wait and do those things, but we would do them periodically. Okay, so at the end of your accounting cycle, or maybe once a quarter, you're going to update that or figure out that amount. Okay, at least annually, you're going to go and do a physical count of your inventory. Okay, and so you're going to go through and say, all right, the last time we did count, here's how much we had in inventory, here are the items that we had, how much each of them were, the quantity, the cost, and then you're going to compare that and take a physical count and say, okay, here's what it is now. So we know what's on hand, and you can also calculate out based on what's left, what you started with, your purchases. You can also figure out your cost of goods sold at that point in time. But again, we just do this periodically. You don't do this each time you have a transaction that impacts inventory. Okay, just periodically will we do this. If, however, you're on a perpetual system, that's the opposite. This is the case where you do always know your inventory amounts and your cost of goods sold. Every time something impacts inventory, you're going to update that inventory account. So if it is a purchase, you purchase more inventory, you're going to update your inventory accounts and know exactly what that inventory is, how much you have of it, and the cost of that. I'm going to know my inventory cost at all times and what I have on hand. I'm also going to update when we have sales. I'm going to update the inventory related to that so I know exactly what's gone, what decreased, what do I have left over now, what's the cost. But I'm also going to know the cost of goods sold for that individual sale. So anytime we have anything that impacts inventory, we're going to update the inventory for that amount. We're going to update the balance for that. We're going to update the subsidiary ledger. And we're also going to know the cost associated with it, both on the purchase side and on the cost of goods sold side. So we always know. You'll also still take a physical count with perpetual systems because sometimes what you have on your records isn't what you really physically have in inventory because of things like spoilage, damage, theft, loss. So even though you are on a perpetual system, it doesn't mean that we won't take a physical count. You'll still do that. You'll still go and physically count and compare it to what you have. Should be pretty close. Otherwise, you've got something else that you need to look into, some bigger issue. But as long as it's pretty close, that's what we would refer to as kind of your normal inventory shrinkage. That's to be expected. But if it's not, then we've got something else that we need to look at. But both a perpetual and a periodic are going to do a physical count. But under the periodic, that physical count, we use it to actually come up with your inventory totals and cost of goods sold, where under perpetual, it's more of a check to see if those numbers are correct and to compare to what you actually physically have on hand.